Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take another look here at Bitcoin, of course, help understand best practice and big picture, and just talk a little bit about the potential green candle we have here forming so far today and what that might mean in the big picture. We're going to discuss bearish engulfing candles and just big picture, essentially what's going to potentially happen next based on this current trend that we're in right now. That being said, I'm not a financial advisor. I love teaching people how to trade. I hope you can learn something here today. If you want to learn a whole lot more, I've got a trading academy, community, and signal group. I share signals for every trade that I take. I've got a series of videos you can watch to help kind of get you up to speed on how to be a better trader. But more important, an amazing community at your back that's always here, willing to learn and grow together. Awesome experience. Thanks again so much to my current community members. You make my life just so much better to be able to make your life better too, if that makes any sense. All right, so thank you so much. Take a look here at Bitcoin though. Here's kind of what's going on. Standard stuff. Obviously, if you've been watching my videos every day, you're probably up to speed on the macro being not so favorable. Obviously, the larger time frames, we do have some ominous news. It's not great, but we're below the 20-day simple moving average on the monthly, which is notoriously a bad sign. If you go back a little further, you can see that anytime we've broken below that, we've stayed below for about 6 months. It doesn't last too long, but generally speaking, it comes down to test the 50. Now that's what we're seeing here so far. We're seeing the 50 potentially going to be tested here in the near future. So it is relevant in the sense that we could see a price point of 20 to 22,000, 24,000 at the very least retested again. And just to clarify too, I get a lot of folks that kind of mention, hey, Bitcoin's lowest point wasn't 26,800, it was 25,400. While that's true on Bitstamp, it's not true on Binance. And I prefer to use Binance as an exchange when you look at more relevant data, like just say a Fibonacci retracement, based on the simple fact that it's much more accurate when you have more volume. All right, that's the whole purpose and the reason why I use this instead. So just please understand that. Yes, it's true that we wicked down a lot lower than 26.7 or 26.8, but generally speaking, that's the overall average so far on larger exchanges. And larger exchanges give you better results just based on the fact that there's more data, right? So anyways, that being said, monthly, big picture here, not looking fantastic, but we do have the 50 to potentially save us, right? We can see very similar behavior here with the 200 on the weekly, also working as a potential support at 22,000. So we got 21.5 and 22,000. It's safe to average it out about 22 should be the bottom for Bitcoin if it performs similarly to as it did in the past. We're also underneath the 20 presently as well on the weekly. So for the most part, this is disadvantageous, kind of just telling us that there is more potential for downside, just based on the overall sense that we're below certain levels. We are still descending in this trend. Until we break that trend, we cannot anticipate Bitcoin going on a rally or even coming close to 37, 40,000. Like 37.5 I think is a best case scenario for us. Literally, it could peak up to that point, but it'll likely get rejected and continue back down to continue to hold this descending trend. And if you look here too, this trend, of course, if you just kind of continue it all the way down, you can see it's going to take at least 2, 3, maybe even 4 more months before the price to come back above that trend. Coincidentally, that'll put us back up above the 20-day simple moving average on the monthly, if in fact we can get that kind of momentum and that shift. Once again, 6 months is how long it took when we went underneath the 20 on the simple moving average. What was it? I think it was 2019 is when that occurred last. So 3 years ago, we had a similar situation. All right, so taking a look at the daily. Here's kind of what's going on here. We're below the 20, 50, and 200. So generally speaking, disadvantageous once again, just kind of reiterating the fact that the macro isn't looking fantastic. But the fact of the matter is here that the 20 is kind of starting to average out, and we could maybe break back above that. That could be a very positive sign. Until we get there, we got to expect us to continue to stay low on the price point here. We might see a rally here soon, which has been anticipated. We saw one over the weekend, but a bearish engulfing candle yesterday. Taking a look at the RSI though, we can see that RSI is peaking up above 30. We've held above 30, which is good. Kind of reiterating the fact that 29,600, 29.6 should be the bottom in the immediate future. That, again, should be. Is it 100% going to hold? No, it just means that we are above that potential key level support, and it may continue to hold, but again, the more often you test a support level, more likely it is to break. And it does look like it's hugging this line here and wanting to come back down. Looking at the MACD, we have a potential convergence here, but this really just tells us that the bears are losing control from this momentous trend that they had here, and that there's really no reason to consider this to be bullish or bearish at this time. Okay, it's kind of just fair to Midland, right in the center, nothing really to worry about. Let's go ahead and take a look at the big picture here though. Here's something I want to kind of explain. When I say big picture, sorry, I'm mostly referring to just this bearish engulfing candle. It's kind of like the elephant in the room. Notoriously, bearish engulfing candles signal reversals. Now, the day after a bearish engulfing candle doesn't always have to be red, but usually the days after a bearish engulfing candle are red. And let me give you some examples here. If we kind of look back here, of course, this is an easy one, of course, to identify because it just happened. But if you look at this, bearish engulfing candle followed by a bunch of red days. In other words, this 24-hour period was controlled by the bears, and it completely negated all the progress made the day before. Okay, so we see one there. We'll go ahead and leave that. See our bearish engulfing candle. There's another one here with a red day to follow. We've got, if I recall correctly, there was a small handful of them too, where we got, like this one for example, we had a green day to follow, right? But unfortunately, the price continued to digress from there. Okay, so again, the bearish engulfing candle. Bearish engulfing candle here. And do we see any other ones? There's probably a few of them I'm missing, but generally speaking, if you can kind of see the trend here so far, when we identify a bearish engulfing candle, the days to follow eventually dissipate and come back down. Now again, there's no guarantees on this because obviously we look harder, we'll be able to find some bearish engulfing candles that were followed by green days and the price inevitably came up. I mean, you could argue the same thing right here, right? That was a bearish engulfing and the price just shot straight up from there. So again, no guarantees, but probability-wise, the likelihood of the price going down from here than up from here is quite high. Okay, now we may not see that today, but we should see that in the near future. All right, just something to pay attention to as a potential stark reality. Okay, so just wanted to throw that out there. Let's look at the 4-hour time frame. We're up over the 50-day SMA and still maintaining the 20. So this is positive in a sense, but these candles are not really ultimately what we're looking for. We've got low volume on a weekday, which is kind of strange, and it's not really all that ideal. And especially with this, I know this candlestick is just started about an hour and a half ago, but we do have basically a gravestone pattern here forming, and you can kind of see this little shelf right here at about 30,500 that's holding strong, not allowing the price to come up. So what that's going to do is that's going to disallow a higher high and essentially create a potential lower low. No guarantees, of course, on that, but it has to go one way or two, right? The price will go up or the price will go down. And based on what we've seen here so far, there's a lot of selling pressure right around 30,000/31,000. I'm venturing to guess we're going to see the price start to dissipate. That's a speculation here, just based again on the overall data. But we are up over 50 on the RSI. Sometimes that can work as a support level. So bear that in mind. We might actually see that maintain the current price point and continue higher. Again, there's a lot of conflicting information, but the elephant in the room, the thing we need to acknowledge, bearish engulfing candle yesterday, significant bearish divergence in the overall sense of things. We're under the 20-day SMA on the monthly. Honestly, the macro doesn't look fantastic, and that's just something we got to acknowledge and be okay with, and just address that. Hey, this isn't ideal circumstances. Not the best situation to consider taking a long position. All right. If you have a long position open, maybe consider removing your stop loss until this recovers, because Bitcoin will inevitably recover, but it's probably going to go down before it comes up again. It's pretty much the stark reality that we're looking at right now. And once again, just save your funds, keep your money aside and have it available so you can go ahead and reinvest at a lower price point. It's not the end of the world. Taking a look at the 1 hour. Let's go ahead and see what's going on here. First of all, with the 1 hour, I think we're above the cloud, but we're getting we're testing. Yeah, so we're testing the cloud right now, so to speak. In other words, the price is coming down, trying to test this upper lead. What that basically just means is that, this should work as a support level, but there's no guarantees. As we can see here previously, when the price came up, it obviously came back down to retest and come below for a little while, the cloud. And what that essentially just tells us is that the cloud for right now, based on this moment, the trend itself being overall bearish, we have to anticipate when the price comes above the cloud, it'll get rejected inevitably by something else, such as the moving averages that we've seen previously. But generally speaking, what I'm getting at here is that It does technically right now tell us that we have a green light to keep our position open if you have a long position open, because we're above the cloud, conversion line's above the baseline, but the lagging span is struggling and it's almost to intersect with the price action. So just say the price goes sideways from here, it would kind of give us that sell signal to essentially get out of our long position if you're conservative, to kind of signal a potential reversal, right? Now again, there's no guarantees the price is going to come down here, but we've addressed a lot of things here today, right? Everything is essentially telling us it wants to come down, so there's not a lot of momentum and not a lot of reason to want to gamble, in my opinion, on the upside. Okay, just based on what we've seen here so far. Again, the technical data tells us certain things. It tells us a story, and the story right now is not fantastic in the overall sense of the price increasing from here. Once again, better value as the price comes down, but we got to expect it to come down here in the relative near future. Could we see a rally between now and then? Yes, I think that is possible. It's tried a couple of times. It is still technically making higher lows and higher highs. Okay, so this is not bad by any means. Okay, it could very well continue. This could be the low here, and we'll make another high up here at around 32,000 potentially. But until that happens, we should expect the price to go the other direction. That's just kind of what I'm thinking here. Again, I'm not perfect. I've been wrong in the past, and I can totally admit that. There's nothing wrong with not being right in trading, because, man, these whales will certainly surprise you. But the key is to protect your investment, to use good risk tolerance. Those are all things I teach in my trading academy, and I can tell you that it's really important to have a good structure, a good mental, I guess you could say, clarity and focus, because like if I'm not sure how to describe this, but if you're not healthy in your mind, then you're not going to be making healthy decisions, right? So make sure that you are in a good state of mind before you start trading, first of all. Fear of missing out is a terrible thing. You want to try to avoid that. I consider it emotional investing, and those are things I also cover. And I think it's important for us to look inside first before we trade. And I know it sounds crazy and weird, but not a lot of people talk about it. Either way, anyways, it's another conversation for another day. I hope you learned something here today. That's essentially where we're at. Just be cautious here. Notoriously, bearish engulfing candles are followed by red days, and this could be the start of the downtrend. Again, I don't think we're quite there. We could very well see a rally. We're still making higher highs and higher lows on the hourly, so it's not terrible. Once again, you're gambling on a long position right now. That's all there is to it. All right, well, I hope you learned, again, something here today. If you want to comment below, feel free. If you would like to become a better trader, CryptoCache.tech is a site. Link in the description below. I do look forward to working with you. Hope you have a great rest of your day. Thanks so much for your time. We'll see you soon.